Hello and welcome to this new video. It's DC Capital and this is episode 6 of the continuous series for the weekly review and market outlook, and we are jumping right into the weekly profile for last week's trading. But before, we're looking here at the daily chart, and I advise you to go back in episode 5 at the end and watch the market outlook again. And you can clearly see that my target for this week was this buy-side liquidity pool here, and price went exactly in that direction and is seeking buy stops above this high and above this high. Okay, now we're here at the 15-minute chart for the micro E-mini S&P 500. This is the weekly profile for last week's trading, and the bias was bullish. So we're looking only for bullish setups because our bias for this week is one-sided. There's a clear drawn liquidity here, and I also mentioned that in episode 5 previous week market outlook. You can go back and check that again, but here you can see that the midnight opening price is delineated with this red line here, and we are looking for price to trade below this midnight opening price, and we buy that because we're expecting price to trade to the upside into buy-side liquidity levels based on the daily chart. On Monday we can see that price is trading higher to trade lower. Why is price doing that? Because price is trading lower to offer sell side for the retail traders and to offer the banks a cheaper price to buy into. Bank is accumulating long positions in here, and you can see that price is trading lower during London open time period, and from there it is aggressively trading higher and closing this day with a classic buy template. On Wednesday we don't expect any big moves because usually after a large range day there's a small range day. So Wednesday we are waiting patiently, but we are not expecting big moves on that particular day. First day trading day, we expect another run to the buy side, and we can see that here midnight opening price is trading lower, rating the sell stops with sell side liquidity in this area, and from there it is seeking buy side, trades higher, up close candle as well on the daily chart, and Friday is trading higher, seeking buy stops, and is trading back into the daily range and closing this week in this equilibrium price point. Let's jump right into Monday's trading. This is the 5-minute chart for the ES. And what we can see here is price is trading higher. This is the Tudor swing during London open kill zone, and from there price is creating relative equal highs and relative equal lows and building liquidity on both sides. But notice that the price is breaking market structure here on this candle with that move lower, and we have created a fair value gap and an order block. Also, we are in the New York morning session, and price is trading higher into an optimal trade entry as well. Price is finding its low of the day during the time of the on-close orders, which is from 3 p.m. to 4 p.m. New York local time. And usually in this time we see the algorithm repricing aggressively to force the traders to close their positions and don't take them into the next day. We can see that here price is aggressively trading lower, and after that price is staying in a tight consolidation for the rest of the night, if you will. Also, we can visualize the optimal trade entry here. We can see that price is trading higher into this short-term premium array above the 50% equilibrium price point, and from there price is making new lows and trading aggressively lower into the negative 400 extension, which is a symmetrical price point times 4, and time of day is also in line with that because this low was formed during the on-close orders time period. And here you can see the whole model. We can see that price is breaking market structure here, bearish market structure shift. We are in the New York morning session, so time of day is in line with that. Price is trading higher to rebalance this fair value gap, and finally trades into this bearish order block, and from there price is trading lower, making new lows, and price is trading aggressively lower and finding its low during the on-close orders time period. Okay, let's jump right into Tuesday's trading. This is the London Open kill zone sweet spot from 2:30 to 4 in the morning. And also we can see here the high probability buy template. First, the buy side liquidity pool got raided with this move higher, and after that the sell side liquidity pool got raided, and this template is high probability buys because on this move higher retail traders are going long, breakout traders are long, they are buying the market and they're putting the stop loss below here, and the bank is knowing that they don't want that the early buyers are profitable on this run higher, so they know that their stop loss is here, so they're repricing lower to take out the early buyers with their stop loss here. The early buyers have to sell back their positions, and also the short breakout traders are in the marketplace here, and the bank is using that to pairing up long orders. The bank is counterparty to the sell side here, so the bank is accumulating longs, and we can see that here price is trading higher. And also notice that we are below midnight opening price. Midnight opening price is this red line here, and we are acting in the sweet spot of London Open kill zone. All these confluences are making this trade high probability, and this could be a really good London Open kill zone buy to target a premium market and to attack the buy side liquidity. On this chart you can see the whole entire morning session for the E-mini S&P 500, and as well the evening session. We can see here that price is trading higher and creating this fair value gap here, and also there's resting sell side liquidity here with those relative equal lows, and if a fair value gap is below relative equal lows, it becomes even more high probability because this is used to pair up orders, and usually we see a really quick rejection once price is mitigating this fair value gap. If we see that phenomenon taking place here, if we see that really quick rejection, then we know we are right on bias and the buy model is kicking in. So we are expecting the highs being taken out, price is doing that, and we are expecting the down close candles to be respected in this whole move higher. And if you look closely, this is exactly what we are seeing. Down close candles, order blocks are getting respected, and fair value gaps during that run higher are getting respected as well. Notice this level here. Those two lines are indicating the Sunday opening gap, and those two lines are acting as real support and resistance. And look how price is respecting those two levels, trading into this level here as resistance, trading higher to the top end of this level. Price rejecting that, is trading lower into this level of discount and rebalancing this fair value gap here. Then price is trading higher, bullish market structure shift. From here price is trading higher through that Sunday opening gap, and now I want to see price getting supported by this Sunday opening gap, and we can see that absolutely amazing here. Price is trading into this order block, rejecting it. Price is trading into the Sunday opening gap, rejecting it. And look at the order flow. Order flow is bullish because all candles are respecting this institutional reference point, and the bodies of the candles are closing all above the Sunday opening gap, and this is institutional trading. So this here is the first position to buy on to target the relative equal highs here and the drawn liquidity for the full profit. On that run higher here, there's another trade opportunity for some scale-ins. Once price is trading lower into this bullish order block and is in a discount market, we can scale in and accumulate more longs. We can see beautifully that price is respecting the SPY model. Price is trading lower into the fair value gaps and is quickly rejecting that and is seeking buy-side liquidity. In the New York afternoon session, price made its way into a short-term premium, but on higher time frames we can see we have relative equal highs here, delineated with this red line, and it's also the drawn liquidity from the daily chart. So we are expecting this run higher to be continued and to attack the drawn liquidity. So we are not looking for shorts, we are only looking for longs, unless this drawn liquidity pool got raided. This is the afternoon session setup. Price is trading aggressively higher. We have this fair value gap in here, and also we can look at the order flow, look at the bodies of the candles. All bodies are respecting the fair value gap and closing in there. This is another confirmation that the buy model is in place, and we can target the drawn liquidity and stick to that bias. It's important to trade in the session times, in the kill zones, because in there's the highest probability for the setups to be valid. We are blending time and price together to get the highest probability in our trading. We continue to Thursday's trading. Personally, I skipped Wednesday in the last week because on Tuesday there was a large range day, and I'm expecting a small range day on Wednesday. So therefore it is not high probability, and this is the reason why I skipped Wednesday. And I was back on Thursday, and this is Thursday here. Again, the 5-minute chart for the E-mini S&P 500. And here we can see that the price stayed in consolidation for the whole entire night during London trading, during London Open, but price attacks the buy-side liquidity here, and from there it is aggressively trading lower. Bearish market structure shift here and here, so there's double confirmation, and we've created a fair value gap in the premium market coupled with this bearish order block. This becomes the entry. We are shorting here and targeting a discount market and taking first partials here below this low, and full profit is being covered at this short-term high on this candle. Price is moving efficiently for institutional traders, and this is the high probability setup during the morning session on this Thursday. This is Friday's trading, last trading day of the week, and we can see here that price is in consolidation, trading up higher, taking out buy-side liquidity. During the morning session there is a potential short to target sell-side liquidity, relative equal lows, and the short-term low here. This is a zoomed out 5-minute chart for the E-mini S&P 500, and this template is a classic sell template. Price in consolidation, trading higher to the swing, pairing up orders, and then trading lower for the whole day to create a down closed candle on the daily chart. And let's zoom in a little bit. This is the setup for this Friday. On the 2-minute chart we can see the buy side liquidity rate here. We can see the bearish market structure shift on this candle with this move lower. This fair value gap has been created in the premium market, and we have short-term buy stops resting here above this highs, and from there price is trading lower, hitting the first partial position here and finally hitting the full profit position. Also, price is staying above midnight opening price, which is delineated with this red line here, and we are operating in the morning session kill zone, and this trade is a high probability trade, but I have to be honest here, I didn't took that trade because my weekly profit objective was reached, and I mainly look for longs during that week. So I didn't took that trade, but it's okay for me. I don't have to trade every single day. I'm only operating in those markets when the probability is high and when the drawn liquidity is one-sided. With that being said, let's jump right into the market outlook for the upcoming trading week. This is the daily chart for the E-mini S&P 500. We can see that price rated the sell side liquidity here, and there was a clear one-sided run into buy side liquidity, taking out this high and this high on this run higher. Above the marketplace right now there's this daily fair value gap and this bearish order block, and this could be a drawn liquidity if the US dollar is declining. Let's have a look here at the daily chart for the US dollar index, and as I mentioned in episode 5, I was expecting a rejection from this institutional reference point here, and we can see that the US dollar is trading lower into this fair value gap. For now, the US dollar of course can trade lower to rebalance this fair value gap completely. This would lead into another push for the E-mini S&P 500, but it's really hard right now to determine a draw on liquidity because I want to wait for a little bit more price action. Maybe there's a gap being created on Sunday's opening, and I want to look for the Monday's range and then dial in on Tuesday for some high probability setups. But right now I'm not sure where the market is likely to go, and I have no problem saying that here on Tuesday I will go in the marketplace and look for obvious drawn liquidity pools on the 15-minute chart. I am thinking about where price is coming from and which liquidity pool got price most recently rated, and then I'm trying to cast forward the next logical level where price is drawing to and seeking liquidity. Markets are really volatile right now, and it's important to know when to trade. Stick to the rules, only trade in the kill zones time of day, and then look for the setups I'm outlining here every single week. And of course all this is learned from the Inner Circle Trader or ICT. I will link his channel in the video description like always. And yeah, I'm kind of mixing my own style into these concepts he's teaching, but I'm really appreciating the content and I'm really thankful for this material he's sharing with the people for free. And yeah, thank you very much ICT. With that being said, I wish you all a great trading week, a successful week. Be patient, stick to your trading plan, don't try to force anything. I'm out. It's DC Capital.